The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magicbricks webinar, our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is buyer demand shifts towards smaller and affordable units. And our guest speaker today is E. Jayashree Kurup. She is Head Content and Research with Magicbricks. Jayashree is a business journalist with over 2 decades of experience in working with print, online and electronic mediums with the Times of India, the Economic Times and the Financial Express. She specializes in analyzing real estate data to come up with usable solutions to users. She works with consumers to provide advice on using available information to make wise investment decisions. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. I apologize for the slight delay in starting the webinar because we were facing some technical difficulties. Let's quickly go to the presentation. The PropIndex is an India apartment index produced quarterly by Magicbricks.com. It is a tool providing detailed information on price movement, supply and user demand for multi-story apartments and single floors listed across cities. You can visit it on propindex.magicbricks.com. So it covers a lot of information that is useful when you are looking for a house and to make your property decision. It gives the National Property Index trend, the City Property Index trend, the listed price monitor, the rent monitor, the yield meter, top preferred localities, demand and supply analytics, locality price ranges, and an editorial speak, which editors of the Times Property different editions have written. Let me quickly go to the key findings of the PropIndex in the October to December 2014 quarter. The demand for 1 BHK units grew across India by 1 to 4%. There was also a 1 to 4% rise in demand across cities for residential houses. There was a 3 to 10% drop in supply of premium properties in the NCR. This is significant because the NCR always has had premium properties in great supply and less of smaller units. The fact that the supply has started dropping means developers have started understanding the requirements of the market, and it is to be hoped that they are building in the right categories. Maximum rise in demand for properties worth 30 to 50 lakh in the last 1 year, and this is across cities. Let's go to the Delhi NCR trends. In Delhi, the capital values dropped in over 55% of tracked localities. Remember, this has been a weak real estate cycle. The markets have been very, very flat, and housing sentiment, which you will hear Uma speak about in a little while, has actually plummeted quite significantly across cities. In such a scenario, when capital values drop in over 55% of tracked localities, this really means that the seller's power to hold is coming down. I'm sorry. There's a 1 to 10% drop in rental values in 50% of the localities. There's a 25% oversupply in the 4 BHK and above category in South Delhi and a 15% oversupply in West Delhi. Maximum residential properties worth up to rupees 20 lakh were found in areas such as Uttam Nagar, East, Mehrauli, Ghitorni and Narela. Typically, these are areas and these are properties that did not come into the formal real estate cycle. They were sold not on the formal market, but the fact that we have been able to document this rise in Magicbricks shows that there has been a redevelopment, and this redevelopment is now translating into stock that is being listed on property portals like ours. There has been a 4% rise in demand for 1 BHK units. The supply has remained almost unchanged at 8%. Gurgaon is a very interesting market. It was the most expensive market in the country for a while. But the index has remained stable over 4 quarters and the markets have been slow. Maximum activities were in sectors 81 to 92, about 1 to 4% rise in values. Sona Road and Golf Course Road remain the preferred destinations for sale and rent. These are well in the inhabited areas of Gurgaon and not very new developing areas. As a result, these are places where as soon as the properties come up for possession, the users can move in and start living. There's a 40% demand for 2 BHK units, only 21% supply. There's a 41% demand for 3 BHK units, but the supply is 52%. Clearly, there is a mismatch between supply and demand in the Gurgaon market. There's a 32% demand each for 60 lakh to 1 crore and 1 to 2 crore budgets, and supply almost matches demand. Now let's go to the east of Delhi, which is Noida and Greater Noida. There's a 1 to 7% drop in rental values in over 65% localities as the stock goes up. When there's more stock in the market, the consumers have more choice, and therefore they can pick up properties at lower rental values. Over 60% of demand in Greater Noida was for properties priced between rupees 20 to 60 lakh. In Greater Noida, apartments were in maximum supply at 87%, while the demand stood at 77%. Let's go to Ghaziabad, which is again in the east of Delhi, and it is the lowest priced market for a long time in the Delhi NCR. Here, the maximum demand of 43% was for properties worth 40 to 70 lakh. Clearly, the 10 to 20 lakh budget has now not been overtaken by the 40 to 70 lakh. It is the professionals who work in Central Delhi and Noida who are looking for properties in Ghaziabad, and 40 to 70 lakh is a decent budget there. But the supply remains short by 10%. Maximum rental options were in Indirapuram and Crossings Republic, followed by Vaishali and Vasundhara. Over 45% of the ready-to-move-in options were concentrated in Indirapuram, Vaishali, Vasundhara and Crossings Republic. Now, Ghaziabad is a good bellwether market to track, very similar to the Gurgaon market. In the Delhi NCR, Gurgaon was considered the overpriced and very, very exclusive premium market, and Ghaziabad was considered the affordable. The tags in both places are changing. In Gurgaon, people are looking for smaller units which they can afford, and in Ghaziabad, people are looking for more expensive units of 40 to 70 lakh. There is a lot of supply in the lower ranges, but we haven't seen that moving quite as much in the quarter. Let's take the western region. In Mumbai, the rental values rose by 1 to 9% in 80% of localities. This is a clear indication that the consumer is not able to afford to buy in the Mumbai market, which is why the rental values have started rising. 25% supply in Kharghar in Navi Mumbai, Mira Road, Andheri West and Kandivali West in the western suburbs, and Godbanda Road in Thane. This accounts for 25% of the city's supply currently. Maximum options of up to 20 lakh were in Neral, Kalyan, East, Karjat, Boisar, Titwala and Shahpur. The demand for 1 BHK units accounts for about 50% of the demand, so the supply remains short at 31%. Almost a 20% difference between the supply and demand. In Pune, the supply was up by about 8%. There is a 6% rise in demand for 1 BHK units, but the supply was stable. 30% demand each of 40 to 60 lakh and 60 to 1 crore. Supply was shortfall of about 10 to 12%. Maximum rise in rental options in Kharadi, Viman Nagar, Kalyani Nagar and Magarpata in East Pune. The unit sizes of 1300 to 1650 square feet were the most active in the 3 BHK category. Pune has been a very, very active real estate market. Ahmedabad, 5% rise in supply in the quarter, 1 to 4% rise in capital values in over 75% localities. Maximum options for properties worth up to rupees 40 lakh in Satellite, Bhopal and Gota. 2 to 8% drop in average rental values in nearly 55% localities. Maximum supply of new projects in SG Highway, Bhopal and Motera. Let's go to the south. In Bengaluru, maximum units for sale in Whitefield in the east, electronic city in south, and Hebbal in the north. 1 to 8% rise in rental values in nearly 70% of the tracked localities. Maximum rise in rental values in the last 1 year in premium areas such as Jayanagar, Lavale Road and Cambridge layout. There was a 30% demand each for properties worth 40 to 60 lakh and 60 to 100 lakh, which is about 1 crore, and the supply was at 24 and 21%. In Chennai, there's a rise in demand in the 20 to 40 lakh and 40 to 60 lakh categories. Chennai was always a reasonably priced market, and the fact that the demand in these categories has started rising shows that Chennai's buyers are actually looking for what they have been used to. Chennai had outpriced itself for a while and the consumers had stopped buying, but today the consumers are actively looking for the lower categories. Over 50% of tracked localities witnessed a rise in capital values by 1 to 7%. Rental values in over 70% of the tracked localities witnessed a drop or remained stable. The city offers a gross rental return of about 1.8 to 4.2%. The demand for 1 BHK units noted a rise of 1 to 3% across the city except in central Chennai. The consumer is realistic. The consumer looks for properties where he knows that there will be such properties. There can be such properties. Take Hyderabad. Over 55% localities recorded a drop of 2 to 8% in rental values. The city recorded the maximum demand for properties in the affordable category, 20 to 40 lakh at 37%, while the supply was only 25%. Gachibowli, Kondapur, Kukatpalli and High-Tech City remain the preferred locations for both sale as well as rent. We expect this to continue for a while because there has been a lot of take-up of commercial space across different parts of the city, but currently the IT concentration is in and around the High-Tech City areas. There will be a change in residential demand once the new commercial space starts getting fitted out and operational. Supply continued to outstrip demand for premium properties worth 1 crore and above across all regions. In East region, in Kolkata, over 80% localities in the city generated a yield of about 3 to 4%. That's the highest in the country. Rajarhat, Garia and Newtown remain the most preferred residential destinations in the last 6 months. Properties worth 20 to 40 lakh were maximum in demand at 43%, supply stood at 36%. As in the rest of the country, even in Kolkata, the supply trails demand in the 20 to 40 lakh category. Apartments continue to be oversupplied in the city with supply leading demand by about 9%. The demand for apartments normally rises in cities where there is a lot of population, floating population from other cities coming to the city to work. That has not happened in Kolkata, which is why the intrinsic city demand always is for residential houses and standalone properties. The demand for 1 BHK units rose 3%, outstripped supply by 8%. So why is the PropIndex such a key indicator in the market? For the industry and consumers, there are benefits. For the industry, real estate developers can understand buyer preferences. PropIndex is the only index in the country which tracks demand and gives you demand preferences across quarter on quarter, month on month. You can assess what the consumer is looking for in terms of property type, size, configuration, budget and locality. Therefore, where the demand is, if the developers want to construct, the supply can match demand. For government offices and ministries of urban development, it helps to assess demand and supply gaps and real estate policy making. For construction organizations, it helps to forecast demand and supply situation at the region and locality levels. For the consumer, whom normally nobody services because they are scattered, they are individuals, Magicbricks has always made an effort to service the consumers. This information helps them to endorse their home buying decisions. It helps them to understand their localities and cities better. The real estate trends and analysis gives insight on the real estate price movement at each locality level, at quarter on quarter, month on month, year on year. You can get the details. It allows them to understand how to improve their financial status. For instance, your return on investment data, what we call the yield, it tells you what are the top capital and yield gainer localities in the respective cities. So how do we compute the PropIndex? It is based on listings of apartments and their capital and rental values on the website. Individual properties are aggregated into localities, that's weighted to cities and then to the national index. The weightage is based on the supply of properties within the city. Magicbricks has over 700,000 active properties posted by more than 140,000 active users in 300 cities and 10,000 localities. The info within till date, we have 11 cities, 620 plus localities. Delhi, Mumbai, Chennai, Kolkata, Bengaluru are the metros. Pune, Hyderabad, Ahmedabad, Coimbatore, Noida, Gurgaon and Ghaziabad are the tier 1 cities. Capital and rental value trends are assessed quarterly. Yield on investment, extensive user demand analytics, demand versus supply statistics, the top 10 preferred localities city-wise, home in your budget, and Times Property Editor's perspective on real estate. You can get all these in the PropIndex. Thank you. Over to you, Aradhana.
Thank you, ma'am, for this wonderful webinar presentation. I would hand over the session to Uma. Uma, can you take it forward from here?
Thank you, Aradhana. Thank you, Jayashree. This is Uma Sitaraman here. I'm the lead researcher at Indian Institute of Management, Bangalore, and in charge of putting out the Housing Sentiment Index every quarter. The first thing is the reason we wanted a sentiment index is that the real estate space really didn't have a sentiment index. We had all other kinds of indexes like the, which track the residential markets, but nothing that specifically tracks the sentiment of home buyers. So this is the primary reason we put out this index about 7 quarters back, and we have found some very interesting and very interesting results so far. Just to give you a brief about the index itself, it's based on the diffusion index methodology, and its values range from 0 to 200. So what 0 means is that the entire pool of prospective buyers, we are surveying think prices are going to go down, while 200 means all of them think prices are going to go up. And 100 is the median range where people expect prices to be flat. So there are 2 things that you should be looking at. One is where is the index at right now, and also what is the quarter-to-quarter change. This is very important, like I'll be sharing with you shortly. Quarter-to-quarter change is really important where the markets are going. Moving on, the shift in sentiment. This is the first quarter here. What happened was the first quarter was just after the elections in May, and there was this huge euphoria because the BJP government got the majority. So you see that across all cities, HSI sentiments looked very good. But then in quarter 2, there was a slight settlement. So the index dropped in most of the cities. And this time, if you see, it looks like it's really plummeted this time. And what we think is it's more of the euphoria settling down. Yes, I mean, the scenario doesn't look too bright right now, with inventories being very high in most of the cities, with infrastructure projects stalling, especially in the NCR region. Job markets where you don't see as much salary rise as you would like to. All of these factors are definitely pulling down sentiments. But what we also see is it's this initial euphoria that's settling down. I mean, even though the new government came in, they do need some time to actually kickstart projects, and it's going to take some time to see the results of all of these changes. Moving on to the next slide, the highlights for this quarter. This again is the first quarter where all the 10 cities witnessed a drop in sentiment. Delhi and Ahmedabad, like Jayashree mentioned, Delhi there was a huge drop of over 30%. One thing is the Delhi market, again, inventory is very high. The circle rates that were announced last quarter also impacted Delhi's sentiment. Ahmedabad went up the previous quarter but dropped by almost the same amount this quarter. So we really need to track Ahmedabad a lot more closely to figure out what's happening here. Both Mumbai and Pune witnessed over 20% drops in sentiment. Again, it's the overheated market, price is a little too high at this point. And like I said, almost all metros in India are sitting at huge inventory levels. So consumers are not really willing to commit at this point. They are either looking to see prices coming down or are looking for interest rates cuts. And as of when we did this survey, there were no interest rates cuts at all. So this is one of the major reasons that we saw some negative sentiment. Again, there was a recent interest rate cut announced, but we're not really sure that it's going to help. Now, maybe a couple more rate cuts will kind of pull up sentiments in the near term, but still prices are at unreachable levels in a lot of cities. Chennai has been a very stable market, and like Jaishri mentioned, it has been pretty, mostly reasonable prices, but even Chennai this time witnessed a drop of 21%. Hyderabad witnessed an 8% drop, and again, Hyderabad has been one of the most volatile cities in the last 3 to 4 quarters, primarily because of Telangana. And Bangalore is actually surprising now because Bangalore has continuously maintained a very positive sentiment throughout our surveys, because only last quarter it dipped, and this quarter it further dipped by another 17%. So sentiments which were hovering around 143 close to 150 have now reached 100, which means that most people, even in Bangalore, are neutral towards home prices. Moving on to the analytical insights. So basically, how do we use all of the information that comes out of the survey? So we do a lot of mixing and matching of the data to see how it affects the demographics. Who are the people who are actually looking to buy? What are they looking to buy? What price ranges are they looking to buy? So I'm just sharing a couple of insights with you. So across cities, 78% are looking to buy property as a place of residence for their family, which is very important because which means that they're really serious about buying. So the minute we do see some macroeconomic activities that are in favor of the general public, we should see sentiment at least going up. 67% plan to finance their purchase with a home loan. Now this again is important because that interest rate cut is really going to mean a lot for huge percentage of people. 66% want to buy a flat in a multi-story apartment. Now this again predominantly in the northern regions like Mumbai, Delhi, etc. Most people prefer flats, whereas if you come down south, Bangalore, Hyderabad, Chennai, land also is preferred along with flats. 50% earn less than 10 lakhs per annum, and 20 to 40 lakhs is the preferred price range. Now this again, 30% of people prefer 20 to 40 lakhs, and there's another set of at least 10-15% who prefer property below 20 lakhs. Now this again means, as Jaishri mentioned, that we have a huge demand at the lower end of the property price, that is between up to 40 lakhs, whereas if you go further up beyond 80 lakhs, demand kind of reduces. 16% of respondents are from the IT sector and 13% are self-employed. Now this again is kind of the where do people work, we kind of analyze is their position making any kind of change to sentiment, and in some cities we do find some very surprising results. So, average wait time has decreased to 8.2 months as compared to 9 months this quarter, which is actually a good thing. So although sentiment has plummeted, people seem to be wanting to wait less. So it looks like all these are waiting for is some cues so that they can actually go and make that purchase. Now moving on to the property preferences. 66% prefer apartments, and the HSI for this population is 87. There's 13% that prefer this. The HSI is 100, and that's actually a small percentage of population, and again concentrated in the southern parts of the region. Another interesting thing is positive sentiment for land has always been about 11% higher throughout all quarters than when compared to apartments. And like you see in the graph, you see like regions like Mumbai, Noida, Pune, etc., where people mostly prefer flats, whereas land is preferred in Bangalore, Chennai, Hyderabad, so on, and villas are popular in Chennai and in Hyderabad. Then 80% of those who prefer flats intend to purchase for the purpose of residence. So this again is from analytics based on what do people buy, what are they buying flats for? Is it for residence or for investment and so on? 41% of landowners intend to purchase land as an investment, and this again is not too surprising because mostly people want to invest in land and then hopefully keep hoping that real estate prices go up in the long run. 50% of those who prefer flats and 46% of those who prefer land want to buy within the next 6 months. So there's a major percentage of people who would really like to quickly transact and actually buy. 89% of residents in Mumbai intend to purchase flats, so that's the highest, and again not a surprise. 25% of residents in Bangalore intend to purchase land, and that is I think the major percentage of people who want land. 14% of Chennai residents intend to purchase villas. Apart from this, we also do a lot of other interesting insights, and you can look at our complete report, which is available at the IIMB website to gain more insights. A couple of interesting points to note are that there's a recent easing of rules for FDI in the construction sector. That is really positive indication, hoping FDI investment in real estate increases and cash is much needed. I mean, most developers, I'm sure, would agree that cash infusion will help them at that point. Last quarter, consumers were waiting for a rate cut. So like I mentioned, at the point that the survey was done, the rate cut was expected, and RBI's recent announcement is a positive indication. So we just need to wait and see if sentiment improves before the next survey. Inventory levels again are very high, especially in the NCR region. So that is not an ideal environment, and especially if you look at investors. We also have another seller index where a portion of people are looking to invest and actually want to sell within a year. Now this is typically your investment class, and they don't really want to jump in at this point when prices are at an all-time high. So they would be really concerned to put in their money in real estate. Another major factor is your stock market. The stock markets are hitting all-time highs. And this is another, not a very positive thing for real estate, because investors are going to probably prefer stock markets at least in the, near future. So real estate may not be the most attractive class for them right now. Renters, now those who are renting, form 51%, and this again is a good thing for housing markets, because hopefully these people are really looking to buy seriously and want to get into a house of their own soon. So just a brief about the sampling technique. So Magicbricks conducts an online survey across 10 cities and pass on the results to us. And we in turn analyze the results and share these interesting analytics with you. It will be great to hear back from you also, so we can keep improving our process. So any questions you have, contact details are mentioned in the IIMB query website. You can contact us there, or share with Jayashree your questions. That's it from my side. Aradhana, I'm handing it over to you.
Thanks for sharing these insightful presentations with us. Let's quickly take up the questions now. I would request both our speakers to read out the questions and their answers so that all our users may listen to the insights. Jayashree ma'am, the questions are coming to you. Can you please open them up? Are you able to see them?
Yeah, just a minute. Thank you, Uma, for that really insightful presentation. And let's go to the questions. Okay, we've got Ravi Deshmukh, who has asked, if in affordable housing for EWS, FSI is 1.75 in the municipal corporation. Ravi, you'll have to spell out your question a little better. What is it that you want from us? And we would be able to tell you. But let me very quickly tell you that actually FSI is not even across the country, and affordable housing rules itself are being formulated as we speak. There is a lot of thought in the government on how to ensure that affordable housing does get delivered. Now, affordable housing is a very badly misused term. There is an affordable category in every level of housing, but there is something that I would like to very quickly highlight here. The EWS housing is a social, there is a social component to it. From LIG onwards, it is to make houses affordable to people who have small salaries and who would like to live with dignity in good quality housing. So there are, both these have to be considered when you talk about affordable housing. Okay. Till now, affordable housing has always been in the outskirts of the city, which is poorly serviced with infrastructure and so on. The Modi government's aim, and a lot of researchers like us are working with the government to figure out how you can make this kind of affordable housing available within the city. Globally, affordable housing is available within the city because it is well serviced with public transport and so on. But in India, because of the land dynamics and because land is so expensive, it has always been thrown into the outskirts of the city. We need to bring it back into the city, and that's what the government is working on. Ravi has sent another, Ravi is from Amravati. Vineet Majoka. Uma, would you like to add to that in any way?
No, Jayashree, I think you've covered it all.
Okay, fine. Let's go to the next question. Vineet Majoka wants to buy an apartment in Noida Extension with a budget of 30 lakh. Visited the site but didn't know exactly what quality the builder is delivering. Vineet, this is a common query that comes to us again and again from users. So let me give you some tips that we give to many people. You know that a budget of 30 lakhs can buy you. With some developers, you get a smaller apartment. With some developers, you get a larger apartment. You have to look at 3-4 things before you start looking. First, figure out which is the most convenient place for you. Now you have looked at Noida Extension because your budget is small and you would be able to get a good apartment, a good sized apartment compared to many other places in the city. Now look at, for instance, come to Magicbricks and put your requirement on the search bar, and you will get a list of apartments that are available. Now you have different developers. How do you decide which developer to buy? I think that is the question that you're asking. Right now, there is no quality parameter that is mandatory in the market. But there are, the people who have already been staying in apartments built by that developer are the best bet for a user like you. Suppose you start buying, you think of buying one apartment. At least 2 or 3 people who have already bought from that developer, go to them and figure out how happy they are. Some developers may have a track record of delivery. Some developers may have a wonderful track record of the quality that they deliver. Some others have a good track record of maintaining the apartments, and so that your life is very convenient after you've taken over. So you see, or some may have all these put together. The best way to figure this out is to find out how others are living in those apartments and if they are happy with it. Sometimes it's not even a bad idea to ring a bell and figure out whether they are happy living in that development. That is the best way of figuring it out. First, look for properties in your price bracket. Look for the layouts and the facilities and amenities that are being offered to you. Then whether the handover dates suit your convenience, and then go and look for end users who have actually been staying in those developments. I hope I've answered your query. Uma, is there anything you want to add?
Hi, Jayashree. Not at this point, Jayashree.
Okay. He has, Vineet Majoka has also said that he has gone to, a particular developer and has come across various issues, negative issues that has come across. Look for the negatives. Is it relating to the development? If it is, then you have to take a call. But if it is, somebody doesn't like a developer, there have been other problems, I would say go with the development and see if you like it. If you like the development and it matches your requirements, don't go with what other people are saying. I would still say that ultimately be very selfish when you buy a house and look at your own interest. If it services your own interest, that's what you should be looking for. Abhishek Parikh has said, can we expect appreciation in Greater Noida West? Abhishek, I'm sorry to say that the markets are actually not looking up very much in terms of price enhancements. If at all, from the housing sentiment index that Uma has just presented, the sentiment is down. And if you're going to look for appreciation in a market that has been flat or even dropping, that's not the right time to look for an appreciation. And now look at what are the triggers that Greater Noida will have. Greater Noida has had a spate of announcements, right? You've got the F1 track, you've got an announcement of a night safari, you've got a lot of educational institutions. So you have a lot of drivers there, but the drivers have not played themselves out very well. Once, suppose the night safari takes off tomorrow, of course it will, your values will go up, irrespective of whether general consumer sentiment is up or down. So Greater Noida, and in the Greater Noida area, there is a vast quantity of supply that is coming in. This supply will ensure that the prices do not shoot up for a long time. But of course, you'll get a steady appreciation of it. Normally, there is an 8 to 10% rise in property values, but in the last 2 years, it has been stable, which means that actually property values have in effect dropped because they haven't even kept up with inflation. But having said that, are you going to see appreciation in a hurry? I don't think so. I think markets are going to be steady. What is going to happen is when consumer sentiment turns and consumers start buying, that's when you can think about appreciation.
Actually, if I can just quickly add here. One thing about Noida also is that I think infrastructure, there's a lot of issues, lots of spending infrastructure, and like a lot of developers getting into trouble. So if you are investing, that's another thing to keep in mind. Making sure you are going with the right developers and doing your homework right before you actually invest in property.
Absolutely, Umar. If you look at all the problems that have happened in the Greater Noida region in terms of the land compensation, the entire land compensation problem started with Greater Noida, where the farmers demanded more compensation for the land because of the development and the high values that were being charged. Then you also have the National Green Tribunal, which has put a stay on development in some areas. Till that stay is lifted, there is going to be problems. So you see, general sentiment is down, and in Greater Noida there have been many factors which have kept the values down. So I would say that actually try and get a good rental return. If you are invested in the Greater Noida market, try and get the best rental return you can and hold your property till these problems sort themselves out. It's not that these problems will not be sorted out, and the new government is making a concerted effort to solve a lot of property-related problems. Let's wait for those to be cleared, then you would get a much better price for your property. Akshay Shah has said, till when will prices start increasing in Pune and Mumbai? This is $1 million question. I don't think anyone will be able to tell you, Akshay, when the prices will start rising. But one thing we can say, Uma mentioned it in her presentation, when the general economy looks up. Today, there are many indicators that the economy of India will look up, but the looking up has not quite happened yet. The job market is stable, but not on a rise. People have not got the kind of the assessments and salary enhancements that indicates that the economy is on a rebound. All that will contribute to sentiment, and all that will enhance the property values, because when people get more disposable income in hand, that's when they start investing more in property. And right now, the stock market is doing very well. Whatever disposable income people have, they are actually putting it, even small investors are putting it into the stock market and getting healthy returns. Now, this is one reason why many developers have come up with interest rate subvention schemes, where you can put a small amount into the property market and remain invested, so that you don't need a regular investment into property, but you've already entered the market. It's good to look for good subvention schemes, or schemes where you have to put in a little bit and you get a long period of respite, because that is the time when the property market will start doing well. These are all small indicators, and we have to wait for it. Nobody will be able to tell you when the property market will start rising. Uma, something to add?
No, not really.
Okay. We have Naveen Pawar, he says, how is Exabia developers for buying an affordable home? Now, Naveen, you know as well as me that this is not one one of the leading developers. But this is the problem with affordable housing. You have small developers, little known developers. They come up with lower priced housing because they are in the market for the first time maybe, or in small local markets. There's no harm in buying from them, but you must do your homework very well. Find out who the developer is, the background of the developer, how many square feet, million square feet that developer has already constructed, how many projects are there. If a small developer is over leveraged and has very, very many projects in the market, the chances of them delivering these projects on time may be difficult. Also check whether the developer is funded, the project that you're buying into. How is the funding? What is the funding pattern? It could be from a bank. A bank can give project funding, or it could be a PE fund which is funding the project. These ensure that the developer has enough money to complete the project, and therefore the project will be handed over on time. So these are small things that you should keep in mind, and that would help you understand. And like I said before, if you're looking for that property, I think it is good to go to that development, check out on the ground, and if you can find people who have bought with that developer or has lived in that development, whether they are happy. If they are, then it's a good idea to buy into them. Abhishek Parikh has said, I am planning to buy a property in Greater Noida West. Can you explain to me, is it a good decision to buy a property or rent an apartment in the region? Abhishek, right now, you will be able to rent an apartment very easily. There's a lot of stock in the market. Since you're interested in the Greater Noida market and you're looking at it, I would say that there's no harm in, if you've already decided to stay in that market, it's a good idea to buy when the property values are low. You can take a house on rent, continue looking for your property. If you find the right property, buy into something that allows you a long-term payment. But on the other hand, if you want to buy a house and move in immediately, values are low currently, you will be able to buy an apartment, buy into something that is at completion stages or 6 months from possession. Then you will be able to get the apartment, get it fitted out and stay in it. But do ensure that the place that you're buying the apartment in is ready to be occupied. While your development may be ready, if there are 100 other developments that are under construction, you will have to bear the inconvenience of trucks and construction materials and laborers all over the place. So then it may be a better idea for you to get invested into a property, but take a house on rent where it is convenient to stay. This is a problem that always happens in new developing areas, where you will find that the convenience of stay comes a little further down, and you must be able to offset your buy decision with that. Vineet Majokar says he's looking for a 2 BHK flat in Noida Extension with a 30 lakh budget. I think Vineet, we spoke about this. Do look for the properties that you want. Go to Magicbricks, put your requirements. You'll get a series of properties. See if you can find them. Go and do your homework very well. We allow you to do a lot of homework by giving you information that will help you in your property search. Go to advice.magicbricks.com, and this will allow you to do your property research. There is Hemraj Chaudhary who says, how to verify if the property we are buying is not into any dispute litigation and it is not sold to more than one person and the purchase is possible. Hemraj, what you have to do is try and take a loan. If you need a loan and you take it, of course you will go to a bank and that will be done. But so even if you don't need it and you were planning to buy from your own resources, I would say take a small loan. When you go to a bank and the bank does the due diligence, after all, they are mortgaging the property. They do their due diligence and figure out whether that property is worth lending to. That protects your investment. Another thing you can do is go to a legal expert. Some brokers, good brokers, offer this service where they will do the legal due diligence for you. This also helps you to understand whether the property titles are clear. Do this because it is very important. Once you buy a property and you're stuck with legal disputes, you may spend a lot of time trying to sort it out later. Vineet Majoka is back with another query. Quality is the main concern, as I had come across many issues related with Amrapali as well as with quality as well as delay in possession. Vineet, you have to, there is so much that an expert can tell you, and there are some things that you have to decide on your own. Delay has been something across the Delhi NCR that everybody has been contending with. There has been delays not by one developer, but many large and small developers. Now, one way of getting around that is to buy into a property that is already, where the structure is complete, and you can buy the property and in about 6 months from possession. That is the time when the first buyers are exiting, and you will be able to purchase the property and the property value enhances. Now, quality is something that you must be able to look at. Like I said, ask people who have lived in these properties, in these developments by the same developer, or you could probably get an engineer or a architect to accompany you when you search for the property. If the property that you are buying is good, if it is certified by an architect, then you can go ahead and buy. Now remember, the quality of construction, while developers, of course the name of the developer is important when it comes to to ensuring the quality of construction. Sometimes the contracting company that delivers that project also is important. For instance, there are very established contracting companies like Shakurji Palanji, L&T Constructions. These are all, if they are constructing, you can be pretty sure that the quality of construction is good. And a lot of developers now have started using experts like this so that the consumer can take it for granted that the quality of construction will be good.
Jayashree, if I can just quickly add here.
Yeah.
There's some construction ratings, I mean builder ratings also, which you may want to look at. CREDAI does some builder ratings, so that might come of some use to you in case of figuring out if if your builders are highly rated. Then you probably do have you can have some faith in their construction, and in terms of delays also, hopefully there's going to be at least lesser delays. And one other thing, like you mentioned, is the FDI coming in. I mean, if this is going to kick in at least in the next half a year to 1 year, that will come in as a welcome news to developers, and hopefully this will translate into lesser delays in the future consumers.
Absolutely, absolutely. In fact, yesterday we were speaking to Kalyan from Red Fort Capital, who said that the PE funds like them are actually looking at developers who have good quality construction but are strapped for cash. Remember that the capital market situation has been pretty tight for developers. So if your project is at reasonably complete levels, there are PE funds which are investing into projects that are good. To ensure completion of the project, they take over the project from the developer and then complete it and sell it. So this is a very good practice, and this can be good for the market. It will clean up the market. So there are lots of positives in this market. And like Uma said, there are ratings. It's not mandatory to get ratings. ICRA, CARE, CRISIL, these are all rating agencies that have been rating developers, but this is not mandatory. It is optional for the developer to opt for. Now, what you have to look for is, if there is a rating of the project, it is good. If there is FDI, again it is good because it comes into the formal process. If there is a well-known contractor developing it, that is good because again it is bringing a level of quality assurance which allows you as a consumer to be ready for it. So these are small proxies that you can use in a market that is still evolving. Please suggest locations which will require minimum investment and give maximum returns in Pune and Mumbai, says Rati Vishwanathan. Rati, the best way to look at this is to go to those areas where the demand is high. You look at PropIndex. In PropIndex, we give you supply and demand. When the supply is moderate and the demand is high, then the prices will not be will not go. If the demand is high and the supply is low, then the seller will hold the prices. But in areas where you can, to get the best returns, enter early on in the cycle. But enter with a good developer whose projects command a premium over the market. Also enter a market where there is good rental demand. For instance, if it is near an IT corridor or a manufacturing corridor or something like that, that is where you will get good returns in the future. But don't enter the property market for a quick return. Property markets, by their very nature, give you good returns, but they give you returns if you are invested for 3 to 5 years. Therefore, enter the market, hold your investment, and exit when the market is going up. Like you read stock markets, the best stock market investors are the ones who constantly read their markets. You can't just buy a property and be emotional and say, I have a property. If you're entering as an investor, you must have an exit strategy. You must know that when the markets are doing well, that is the time when you're going to exit and how you're going to reinvest that money so that you can continue to grow your wealth. So when you're entering a property market, look at those areas where there is steady rental demand, there is lots of drivers such as commercial developments, there is some economic hub that is coming up. These are the areas where you will be able to buy at lower prices today and sell at a higher value later. We have another query from Amit Sen, who says most of the affordable projects are on the outskirts. That means away from the job sector. So is it wise to spend on transportation than on rents for staying close to office? Yes, Amit, these are certain things that you have to offset. Suppose you spend 2 hours traveling to work every day, you come back tired, and you know that you're spending a lot on your transport and the inconvenience of traveling, and you say, never mind, I'll buy where I can afford to buy, which is normally in the outskirts even today, but I will choose to lease that out to somebody who chooses to stay there and use that money to live closer to my workplace. Even that is happening in a very large segment of buyers who say that I would like to buy where I can afford to buy, but I will stay where I like to stay, where it is most convenient to stay. That is also an option. We are at 2:15 now. We'll take another 4-5 queries. There is Surajit Verma who says, smaller and affordable units, what is the affordable price bracket in Mumbai? Surajit, that is a loaded question that you're asking. The Mumbai market, currently the affordable ranges would be, I would say about there is a lot of areas which are way out of the city, where even up to 20 lakhs I have some options on Magicbricks. These are Neral, Murbad, Kalyan East, Karjat, Boisar, Titwala. If you have a 20 to 50 lakh budget, you can look at places like Ulve, Virar, Nalasopura, Panvel, Taloja and Dombivli East. If you have between 50 lakh to 1 crore, you can look at Khargar, Mira Road, Godbanda Road and Kamote. You see, the thing is that there is property listed. When you go to buy, a listed price may not be the price at which you will be able to get it. Consumers, sellers do put attractive rates, but when you go to buy, remember that you also, one, there will be a negotiated value, and the second, you may find that you have to pay money for registration and so on. And like Uma said, there has been a rise in circle rates and guideline values in Delhi, Mumbai, Bangalore, lots of cities. So you have to keep that in mind. Uma, you want to add something?
Yeah, Jayashree. So, yeah, the circle rate increase is a major factor in they're helping you decide. And an important thing is the circle rates. Generally, if you see, In some markets, it's way higher than even the market value, prevailing market values, and this is a cause of concern. One way of that we are trying to work it out at IIM Bangalore at least is to use Bangalore as the first market where we are trying to see if we can build a scientific guidance value methodology rather than going in for a random circle rate increase, which doesn't actually connect with the market. So hopefully this will come into effect, and we are hoping we can try to reach other cities also. So we'll see how that goes, and hope that improves the markets too.
Okay. We've got Raj Nayat who asks, does buying a smaller and affordable unit mean lesser amenities? Raj, unfortunately in the Indian market it has been like that so far, but I see this changing. There are many developers who've gone to far-flung areas and offered great amenities to draw the consumer to them, and therefore you get smaller units. You get more affordable units. They are further away, but they come packed and loaded with amenities. This is a good practice, and typically Thane is an example where developers used amenities and quality of construction to draw consumers, and today it is, the prices have gone up significantly higher. Therefore, when you buy in some places, it is good to do carry a checklist with you and see what are the amenities that you need and which are the amenities that are provided. If you don't have a very large swimming pool in your locality, you may be okay with it. If there is one nearby which you can use, you may be okay with it if it's not in your development, if that brings down your cost and makes your property more affordable. But good quality water supply, good quality civic amenities, good maintenance, these are things that will impact your daily life, and you may want to look at these amenities and ensure that they are offered to you. I've got a query from Bakul Pandey who asks, I would like to buy a plot mainly for investment purpose. I have a wait of 5 to 10 years. Which is the best place to buy a residential plot within 15 to 20 lakh in Chennai? Bakul, I will give you a few ground rules here. Property prices, 3 to 5 years is a good time to hold your property investment. Sometimes 10 years in the present scenario may be too long. Like I said before, please keep checking the value of your investment, and when you see that the value of investment has started going up, or you feel it has peaked because of whatever local factors or national economic factors, then you should think of exiting your property. So don't just buy a plot and wait for it to grow. You have to keep interested in that property investment. Now, when I look at Magicbricks, there are some areas where you can get plots within your budget. 15 to up to 20 lakh you can get in Guduvancheri, Perumal, Koil, Oragadam, and Padapai. These are areas where we have plots listed for sale. Do come to the site and check your properties, and if you have any further questions, do come to us and post your queries on openhouse.magicbricks.com, and we'd be happy to take your queries and answer them. Abhishek Parikh is back. I'm confused between RG Luxury Homes and Cherry County. Please suggest what to compare between two projects. Both are offering almost the same amenities. Size, price, amenities, the developers, reputation, how happy the consumers are in those developments. These are all factors that you should consider. Location of the property is very important. Are you getting the best unit within the development, which has sunshine in winter, which has good airy layouts? These are important factors. Nobody will be able to select for you, Abhishek. Ultimately, the selection of your property has to be your own. If you want to buy for personal use, there are certain things that you should keep in mind. If you are not, if you're buying only as an investor, then you should be more objective about why you're buying that property. What is the entry price? What has been the exit price for the price appreciation in those that developer's properties earlier. These are all considerations before you choose your property. Oman, want to say something?
I know, I agree with Jayashree. So you need to really, it's about ultimately when it comes to buying, it's about each person's individual preferences, right? Well, you can use websites like Magicbricks to kind of narrow down what you would like to arrive at. It is still your own, like what is it that you really like in a house, that's ultimately your decision.
There is Gautam Rakeja. Let me quickly ask the participants to ask about how to, the process of buying and certain value-related queries. If you ask me whether you should buy from one developer or the other, it is very difficult for me to tell you which developer to go with. And I'll tell you why I'm saying this. Because there are certain, each buyer's requirements are different. While you may ask one query here saying, should I buy in Sector 95 Gurgaon under Ramson's Organic Builder? The point is that these are not national developers, these are smaller developers. You have to go to the locality and check out whether this is a good investment. You also have to see the track record of the developer. You have to see whether the sector itself is doing well. Come to Magicbricks, we give you rates and trends, which allows you to study Sector 95 and see how it has done quarter on quarter through the last few quarters. That will give you a good idea of how the sector is performing. But ultimately, which developer you go with has to be your own choice. We'll take the last query of the afternoon. There is Uttara Sharma who says, does investment in affordable segment fetch better returns? Uttara, affordable segment comes with certain tax, especially in a market like say Gurgaon or something like that, where there is an affordable housing policy. The developers are able to sell at a lower rate because of the government policy that mandates them to build smaller units, more affordable units and so on. But if you enter that affordable housing, you can't sell it for 5 years. You have to hold your investment. You have to, the value will not go up. You know that the cap is at 4,000. Above that, the value will not go. But you will have to hold your investment for 5 years. Does it fetch better returns? You see, smaller units are always in demand, so it's easier to sell. Whether it gets better returns is a function of which locality you're buying in, how much you're investing, what is the demand in that locality for smaller units, and so on. So that you will have to assess separately. We help you to assess that by using advice.magicbricks.com. There are many facilities that we offer, and keep watching that space because we are coming out with an action-packed advice section for you where you will be able to compare localities, compare properties and so on. But that is a little in the future, but we are working on it, and I promise you that you will be able to do a lot more yourself. Though I said that was the last query, Aradhana, these are the last two queries that we will take. I can see that there are lots of queries coming in, but we will have to close at 2:30, another 4 to 5 minutes from now. Ina Mohanty has asked, localities offered by DDA are quite backward and not livable. Do you think bidding for properties in such areas is good? Ina, actually the thing is, it's a function of the price versus amenities. Ideally, development authorities are mandated to give all the facilities and make the area livable. If you look at places like Dwarka and so on, they first seeded houses, they put the local shopping centers, the traffic planning and so on before these houses were sold. Unfortunately, development authorities have not kept their promise, and that is why you are seeing some areas that are backward and not livable. But you are getting them at a low value, and a lot of people are buying those apartments in the hope that either the facilities will come or the prices will go up so that you can exit your investment and then use that as a seed capital to buy whichever property is good for you to stay in. Mohini has asked, what is the scope of affordable properties in small cities, that is tier 2 cities? Mohini, tier 2 cities, the value is any which way lower than large metros. And remember that if you're buying that, if for self-use, it's fine. You will be able to get larger units for a lower price in smaller cities. But again, buy into those areas which are convenient to stay in or which have a rental demand. If you are buying as for investment purposes, a lot of people have burned their fingers in small city investments because these have not yielded what they thought it should yield. Therefore, I would say that unless you know the local market very well, don't go for cities that you're unfamiliar with. But tier 2 cities, there are some tier 2 cities like Lucknow and Indore and so on, which have given you very good returns. Even in the south, you have cities like Coimbatore and which have given good yields. Thank you so much for joining us. Aradhana, back to you. Thank you, Uma.
And I'm really thankful to our guest speakers today for conducting this informative webinar with us. It was indeed a great session. And I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Uma, for taking the time out and having us. I hope you both have a great evening ahead.
Thank you. Bye-bye.
Thank you. Bye-bye.